Tesla. Holy smokers, folks. This ain't no dang jokers. Tesla is seeing unprecedented demand. We have two articles to react to here today I want to give my opinion on, okay? First one is this one out of electric. Unprecedented demand after the price cuts here. This is pretty extraordinary. We're going to go through that, what's going on here in detail, okay? Second one I want to react to is this one. Goldman Sachs has some interesting comments around Tesla here that I want to take you guys through on exactly what they're talking about here and how it has implications for Tesla and other automakers. Tesla stock higher after Goldman Sachs weighs in on strategic implications of price cuts. This is one of the reasons Tesla stock was up huge today. Tesla stock was up 7% plus. It wasn't just because of this news coming out about unprecedented demand, which we're about to go through, but it's also because of Goldman Sachs. And you may say, why does Goldman Sachs move a stock that much? I mean, it's Goldman Sachs, okay? And if Goldman Sachs comes out and says some positive stuff about you, it's just the way it is, okay? I don't know what other way to put it. That's just the way it is. If Goldman Sachs came out and crapped on Tesla today, I'm sure the stock would have been down huge. It's pretty darn simple the way this game works. Big analysts from a firm like Goldman Sachs come out and say great things. Your stock does very well the next day. It doesn't mean it's going to do well next month or next year, but at least the next day. It's just the way it is, man. It's the way it's always been since I've been in this game for the past 15 years now, okay? So let's go through this. Hope you guys enjoy it. Thank you, everybody, that subscribed to the channel. 21,000, 600, 700 subscribers. Thank you, every single person that subscribed to the channel. Also, if you're looking to apply to join my private stock group and private wealth group, that will be in the description area. Also be a pinned comment down there. Tesla's seeing unprecedented demand, stores hitting new records. Tesla is currently experiencing unprecedented demand in the United States following the significant price cuts that happened last week. Many stores are hitting new records and inventories are dwindling. Last week, Tesla implemented massive price cuts of up to $13,000 on Model 3 and Model Y vehicles in the United States. The automaker tried to claim that the price cuts were due to a partial normalization of cost inflation, but most industry experts agree that Tesla needed the price cuts to create demand, right? A week later, Electric can confirm that the price cuts are working and doing just that. Sources familiar with the matter, and Electric's super connected with Tesla. I mean, they have all the sources you could possibly imagine. I don't know if there's anybody other than, maybe Elon Musk that has more sources in Tesla and around Tesla than honestly Electric does, okay? And if you're a Tesla shareholder, you probably know Electric very well. Sources familiar with the matter told that many Tesla stores in North America have reached their new record for sales in a single week. New record for sales in a single week? That's insane, because this isn't a sort of environment right now with interest rates and everything going on and just a low demand, the lowest demand for autos right now that we've probably seen over the last several years is going on right now, right? Just look at the car auctions, look at what everybody's saying that's experts in this industry. It's not good. So the fact that Tesla just setting new record for sales in a single week, oh boy. One source familiar with Tesla sales said that the company is experiencing unprecedented demand in North America following the price cuts. Tesla saw similar action in China after price cuts there. The inventory is decreasing at a record rate in several key U.S. markets. As new custom orders, Tesla will likely run out of build slots for North American market in the next few days. They're already going to run out of build slots, which means essentially if you want to get your hands on a Model 3, Model Y, you're going to have to start waiting potentially weeks or maybe even back to months, which is crazy how fast things can flip here just based upon a price change, right? That usually doesn't happen until much later in the quarter. Wow. Okay. On top of the direct price cuts increasing sales, many Tesla models are now eligible for the new $7,500 federal tax credit for electric vehicles in the United States, right? That just started in the new year. In some cases, this reduces the cost of Tesla vehicles by as much as 30% compared to last year. It's insane. As I stated, this is Electric's take. As I stated last week, we knew the price cuts would work, but we didn't know to what degree. I'm right there with them. I didn't know what to do. You know it's going to help demand, but you don't know how much, right? Now it's good to see. It's creating new record demand in several markets. We are also now seeing other auto manufacturers reducing price significantly, like Xpeng today, which is a Chinese one, right? It looks like Tesla might have started an electric vehicle price war, and I think it's in the position to win it. I agree 100%. And I when I saw the price cuts, I was like, oh my gosh. And I told you guys, like, This is going to be insane, man. Like, I would not want to be another auto manufacturer and trying to compete with Tesla with a Model Y after the tax credit now, starting under $50,000. Model 3 after the tax credit, you're looking at under $37,000 starting. Those vehicles of that caliber at that price point in this environment where even not very good cars are now pricing up near $30,000 for base level not good cars, right? And SUVs are hard to even find a decent SUV under $50,000 nowadays, right? And especially something on Model Y caliber, like that's a creme de la creme in my opinion, other than the Model X, right? And so this is extraordinary, and we're seeing unprecedented demand, and you know, it's clear as day. Elon Musk says we are going to focus his company on volume and taking mass market share. This company wants to be the biggest automaker in the world. Make no mistake about it. And I think they're going to do it. It's going to take many years, right? It's not happening this year. If they keep knocking this ball out of the ballpark over the next several years, wait till Cybertruck hits, right? Oh my gosh, then we got an actual truck in the market as well. I think they legit have a great opportunity to become the biggest auto manufacturer in the world by the end of this decade. And I think this is the first real sign of, oh, they're going after it. They're going for the title. They want to be the kings. And I think they're going to be able to pull this off. So incredible, and I don't think the demand's going to slow down anytime soon. And that's extraordinary because of the environment we're in. Don't be surprised if a lot of auto manufacturers have their businesses shrink this year. Not grow, shrink. And Tesla's going to be just putting up, I mean, all I got to say is it's going to be busy at the Tesla factories in 2023. It's going to be very, very busy. Next up here, Goldman Sachs. What does Goldman Sachs have to say? Tesla stock higher as Goldman weighs in on strategic implications of price cuts. Tesla dropped the bomb on the auto market with huge price cuts last week, and now Wall Street is catching up with post-game analysis, if you will see. In a note called Analyzing the Impact of Reduced Tesla Vehicle Prices, Goldman Sachs analyst Mark Delaney takes a glass half-empty, half-full approach. Delaney said the price cuts imply concern over reduced demand in the United States. And once again, that's not just a Tesla thing. I think it's overall just a lack of demand for autos out there, which is something you see in a recessionary environment. Look back to the great financial crisis, 2007 through 2010. Look what happened to vehicle sales. Still, they were selling 8, 9, 10 million vehicles a year in the United States, new vehicles, that is. But that was down significantly from prior to that. It was like 14 to 16 million, right? And so the environment just gets much tougher in a recessionary environment, right? While the reduced prices for Model 3 and Model Y helps the company to better address the roughly 20 to 30% of vehicles sold in the United States market in the $40,000 to $50,000 price band, the price cuts also imply that the recent orders were tracking weekly, Delaney wrote in a note to clients. We therefore lower our EPS estimates on reduced ASPs, average selling prices, which I think is fair. I expect Tesla's margins to fall and earnings per share to fall in 2023. I expect both those, but I'm expecting nice revenue growth for the company and huge volume increase for the company based upon Cybertruck hitting in the back half of this year. And now these price cuts that I didn't really see coming and how substantial they are and how much that's going to make demand go insane. Oh boy. Okay. On the flip side, reduced prices will boost volume of vehicles sold. And when factoring Tesla's gigafactory expansions, Shanghai and reportedly Austin, and ramp-ups, right? And also think about Berlin. Berlin's still a young facility there. The automaker may actually be able to weather any drop in retail pricing with improved efficiency. That is something. Think about it. They had a ramp last year. Shanghai, they've been kind of ramping Shanghai. It's been in a ramping process over the last couple of years, right? But they had a ramp also the Berlin Gigafactory and Austin, all pretty much simultaneously within a 1 to 2 year span. So believe me, Tesla's going to be able to get costs down significantly even more. And Elon Musk wouldn't have made this move if it would have wrecked Tesla's profitability. He made this move understanding that they're finding cost savings all over the place. And as these facilities get more matured over this next few years, they're going to find ways to produce the vehicles faster, cheaper, more efficient. Bottom line. Quote, we see stronger volumes as important for Tesla's vertical integrated model, especially as its new factories likely offer attractive unit economics at scale. We believe COGS, the cost of goods sold, per vehicle at the new Austin and Berlin factories over time will be closer to Shanghai than to Fremont. Whoa, okay, that's not even something I'm quite expecting. We know the Shanghai Gigafactory is, the creme de la creme in terms of Tesla's profitability. That's why they can sell vehicles in Shanghai if they want at cheaper price than anywhere else. I think one is definitely just like that factory is just probably run better than any other factory for Tesla around the world, and they should be able to hopefully do that at the Austin and Berlin factories as well. But the other part is, let's be honest, the workers likely make less at the Shanghai factory than they do in Berlin, certainly, and Austin as well, so that's something to kind of keep in mind, right? And in the low to mid $30,000 per vehicle range, Delaney said. I like that. In addition, Delaney believes higher volumes can act as a lever to increased, quote, monetization opportunities as Tesla can market higher margin software and services offering to customers. That's another component that a lot of folks miss. Every time one of these Teslas sold, right, it's not just about Tesla collecting the revenue and hopefully margin and profits, right, from those vehicles when they sold. The factor a lot of people forget is then there's a decent amount of people that then choose to get full self-driving. You want full self-driving, that's a ton more margin. That's like straight margin for Tesla, right? Some people choose it on a monthly option, which is like $199 a month if you want it on your vehicle, essentially. Some people choose to pay, I know we pay it for both cars. I don't know if it's $10 or $15 a month. It's for all the premium services on your screen, like the satellite maps that look beautiful and everything like that, right? And I pay that on both our cars, right? The Model X and the Model S Plaid. Obviously, more and more services are going to be added over time. You had the supercharger network. More and more Teslas that are out there, more and more things that can go wrong over time. We know maintenance on Teslas is not very much compared to ICE vehicles, but at the same time, like more and more of the fleet that's out there, more and more things that will go wrong. Cars get older, they need this replaced, they need that replaced. That's an opportunity for Tesla. So there's, Tesla Insurance, as that business, they continue to scale that and build that out over the next 5-10 years. Imagine if every person that goes to buy a Tesla ultimately ends up signing up for maybe Tesla Insurance or consider signing up for Tesla Insurance. And oh, by the way, Tesla's continue to scale out their energy business with solar panels. So who's to say Tesla doesn't expand from just car insurance to then home insurance and become, oh my gosh, it's a Tesla insurance company as well. Oh, that's a beautiful business model. Insurance business is one of the best business models, right? So there are so many opportunities here for Tesla that I think just are forgotten because people just look at it as like an old school automaker, like you would Ford or GM, and they don't look at it from the tech side, right? And that's just one of the biggest mistakes of folks that don't think more deeply about Tesla, unfortunately. But it is what it is. It's their loss. Finally, Tesla's scale and unit economics are big competitive advantages versus traditional automakers, Delaney says. And any increase in volumes is a net negative for competitors. Yes. The strategic implications of price reductions and the fact that investors were already anticipating at least some price reductions, in our opinion, likely helps explain the stock's reaction on 1/13 with Tesla shares negative 1% versus S&P 500 flat, and ahead of competitors including Ford negative 5%, GM negative 5%, Rivian negative 6%, Delaney noted. The added pressure for Tesla's competitors coming from reduced prices on the Model 3 and Model Y, combined with tax credits now being accessible for most of the vehicle's versions, means competitors will be squeezed even more. With the new prices in place, Tesla's Model 3 and Model Y stack up very well against the competition. 100%. They go through some of their competitors, which these are joke competitors. This is not even who Model Y is competing against. Like that's the thing I don't think they understand. Like Model Y is not competing against those vehicles. Model Y is competing against every SUV that is sold between the price range of $45,000 and $80,000. That's who Model Y, every single vehicle. It's not really about the Mach-E or the Cadillac Lyriq or whatever you call it or the Hyundai. No, it's competing against every single SUV that is being sold between $45,000 and $80,000, $85,000. That's who it's competing against. And now every single person that buys an SUV or is considering buying an SUV, not just this year, but over the coming years, they're going to have to consider Model Y before everything else. Delaney notes negative margins for Tesla competitors, along with limited availability of competitor EV offerings, are another factor in Tesla's favor. Yes. That being said, Delaney maintains his buy rating on Tesla though cut his 12-month price target slightly to $200 from $205, noting a slight hit to EPS and average selling prices coming from the price cuts. So, yeah, I mean, it's extremely exciting. And when Goldman Sachs is even excited, that's a pretty big thing. And I got to say, Elon Musk, he took a risk on this one, and the executive team there, they took a risk. It was a huge price cut. But man, has it ramped up demand in a massive way. And word's getting out about this. I know mainstream media has tried not to talk about this. They'll talk about anything Tesla that makes Tesla look bad, except this, I've noticed. And you can go to type in Tesla on Google News and you'll see that. But at the end of the day, in the internet age, word spreads and it spreads fast. And everybody's starting to find out about this. And don't be surprised if that demand just comes pouring in 23, regardless of the economic environment. Absolutely incredible. If you're looking to join my private stock group, private wealth group, you're looking to apply to join us in there with myself and all the other members, check out the pinned comment down there. Appreciate y'all. Much love and have a great day.